Here is what the traditional financial system was designed to do: collect interest from you for as long as possible, in as many forms as possible. Your mortgage, your car loan, your credit cards, your student debt. Every month, before you have a chance to build anything, a river of your income flows to other people's wealth-building systems. The average American family pays over $400,000 in interest across their lifetime. $400,000. Not to buy a home, not to build a business, not to create anything, simply to rent money that was never yours. Time is the most valuable ingredient in wealth building, and interest drag is stealing it from you. What if there was a way to flip this equation entirely? Velocity banking is not a debt payoff trick. It is a fundamental restructuring of how money moves through your life. Here is the core mechanic. 4 steps. 1. Every dollar of income is deposited immediately into your line of credit, not your checking account, your LOC. 2. All expenses are paid from that same LOC throughout the month. 3. Your surplus, the gap between what you earn and what you spend, sits on the LOC balance as an interest offset every single day. 4. At the end of each billing cycle, that surplus is applied as a lump sum against your highest cost debt. That's the mechanic. Simple, powerful, relentless. In the LCF strategy lab, you can run this on your exact numbers. The result, on average, is debt eliminated years earlier and tens of thousands in interest that never leaves your pocket. But here's what most people miss. When the debt is gone, where does all that freed cash flow go? That is exactly where infinite banking begins. The infinite banking concept was not invented in Silicon Valley. It was discovered by studying how the ultra-wealthy have operated for over a century. The wealthy don't keep their money in savings accounts. They keep it in whole life insurance policies, not because they fear dying early, because whole life insurance, used correctly, is the most powerful private banking tool available to individuals. Here is what makes it extraordinary. Your cash value grows tax-deferred. Guaranteed minimum return plus dividends from the insurance company's profits. And at any time, you can borrow against it, not from it. Against it. The cash value never leaves the policy. It keeps compounding as if the loan never happened. You pay loan interest to the insurance company, but your full cash value continues earning returns. You are functioning as your own bank, charging yourself interest, paying it back to yourself. In the LCF Policy Command Center, you can see every dimension of this playing out across 20 years. Your break-even point, your passive income trajectory, your estate legacy. It is all there, mapped, calculated, yours. Here is what nobody tells you. Velocity banking and infinite banking are not two separate strategies. They are two phases of the same engine. Velocity banking eliminates the drag, the debt, the interest hemorrhage, the monthly bleeding. It does this aggressively and efficiently, freeing enormous cash flow. Infinite banking captures and multiplies that freed capital. It turns what used to be minimum debt payments into a growing, borrowable, tax-advantaged asset base. Watch what happens when you combine them. Phase 1. Velocity banking destroys your consumer debt. Every debt that falls releases its payment back into your surplus. The snowball is mechanical. It cannot be stopped. Phase 2. That freed cash flow becomes whole life premiums. Your policy cash value accelerates toward break-even. Your accessible capital grows every month. Phase 3. You borrow from your policy to acquire income-producing assets. Real estate, a business, investments. Those assets generate cash flow. That cash flow repays the policy loan, and the cycle begins again. The flywheel is now self-sustaining. And in the LCF Loan Officer tab, every time you choose a policy loan over a bank loan, you see the exact dollar difference. Because every dollar of interest you pay to your policy comes back to your own system. You are the bank now. Most financial strategies are designed for one goal: survive to retirement. Get to 65. Stop working. Hope the money lasts. The legacy compounding flywheel was designed for something entirely different. Legacy. Whole life insurance carries a death benefit that grows over time, not because you're planning to die, but because your policy is compounding. In LCF's estate planning tab, you can project exactly what your children receive at year 20, year 30, year 40, and unlike a will, which is a document, the flywheel is a system, one you can teach your children to operate. One they can teach their children. The Family Access tab exists for exactly this reason, so the strategy, the knowledge, and the capital outlive you. This is not about getting out of debt. This is about building something that still has your name on it 200 years from now. You now understand what most people will never know. That interest drag is the hidden tax on your potential. That a well-structured line of credit is a velocity engine. That whole life insurance, used correctly, is the most powerful private banking tool available to individuals, and that when you combine them, intelligently, systematically, relentlessly, you don't just build wealth, you build a flywheel. That spins for generations.